Real quick, guys, before we jump into today's episode, I wanted to talk really quickly about our accelerator program. So the accelerator program is a new program that we just launched. We're taking a maximum of 10 investors every quarter, and we're plugging them directly into our proven marketing methods to fast track their way to success as a real estate investor. Basically, if you're a part of this program, after 12 weeks, you will have the entire framework that you need to leave your W-2 job over the next 12 months. This is a very intensive program. It is only for people that want to take real estate investing very seriously. So if you think that you are a candidate for this, please go to collectingkeyspodcast.com/launch, submit your information, and we'll give you a call to see if we think it'd be a good fit.
Welcome to the Collecting Keys Friday Focus.
Hey there. Welcome back to another episode of the Collecting Keys Friday Focus. You got me, your host, Dan Austin today, and I want to talk everything private money lending. If I have some time later on in the episode, I'll talk about other lending resources. But if not, I'll do a second episode on other lending sources. But for today, I want to be mostly about private money lending. And before I dive into that, I just want to ask a simple favor. If you like what we're saying, if you learned even one thing from any of the episodes, which we've got hundreds of episodes out by now, if you haven't given us a review, please just go to wherever you're listening to these, go to the show and give us a 5-star review and leave us a comment. And by the way, we're still giving out free Collecting Keys t-shirts. They're nice shirts. They're comfy. They fit well, lots of different colors. Just screenshot your review, DM me on Instagram at InvestorManDan with that screenshot and your address, and I will mail you a free shirt. It's a sweet shirt. I like them, and it's definitely worth doing a review. You know, I used to be a pretty passive listener of podcasts until I started producing a podcast and really realized how much the reviews do help the podcast grow, and also just how they help us, Mike and I, look at our show and make it better for you all. And it fuels us to get excited when we see a new review come in. And so, yeah, if you don't mind just stopping for a second, going and do that, I would very much appreciate it. Anyhow, let's dive into private money lending. And I want to start out by setting a baseline of what I'm talking about when I'm talking about private money lending, because sometimes the terms get kind of squishy and thrown around between private money and hard money and all other terms that people like to use. When I talk about private money, I'm talking about going and finding somebody in your network that has cash, money, gold, and is willing to loan it to you, typically secured by an asset or at least secured by you with a personal guarantee. It doesn't have to be a first position. It can be a second position on a property, or it can just be, honestly, written to you as a loan with no security, no asset securing it except for maybe a personal guarantee by you. Lots of ways to do this, but it's from a private person, not an institution that maybe has a fund that they've raised of investor money and they do what we call hard money loans, not a big bank that is loaning out money and then selling those mortgages, none of that sort of stuff. Just simply a private party transaction almost, not involving a business or an entity, friends, family, other investors within your network. So that's baseline what I call private money. Sometimes can be confused with hard money or are interchangeably used at times because they're kind of the same loan a little bit. Okay, so now that we know what that is, let's talk about why you should use private money, because a lot of times people tell me, they're like, man, I can't wait until I have enough money saved up. I'll just do my deals with cash. Now, if you want to do your deals with your own cash, that's fine. But like anything, you're going to run out of cash. Real estate is a cash and asset intensive business. It takes a lot of resources to do this. So you might save up cash and you can do one deal at a time, but do you have enough money to keep marketing and so on and so forth? Do you have enough money to do a flip and a bird at the same time? Or how many flips can you do, right? So by using your own money, you're going to limit your capacity. Mike and I we still use other people's money on projects we're doing. We even have our own hard money lending company and do our own loans through that business, but we still borrow money from other people and other hard money companies. So it's a way to use leverage to expand what $1 can do. And most importantly, it gives you the ability to keep operating your business, especially if you're operating a direct-to-seller off-market real estate business where you got to keep pumping money into it in the event that, you've got a month where maybe you bought all of your deals that you found marketing to people, and now you don't have a wholesale fee coming in to pay your next marketing. So having that liquidity is highly important. But on top of that, it's super flexible. It's fast to close. It's just easy, generally speaking. Once you have a good relationship with a private lender and they know how to underwrite it and you've helped them figure out the whole document piece, or they've come to you with their document package, whatever it is, once all that stuff's in place, Mike and I have done loans for people where we'll turn around in 24 hours. You You give me the details on it that afternoon, and by the next morning, I'm ready to rock and roll, usually if it's a good deal for us to loan on. So it's super fast, not like a big hard money lender or a big bank where they say they need 35, 45 days to underwrite the deal or 2 weeks to underwrite the deal. Private money is much more flexible. The terms are more flexible. You can kind of do whatever you want, right? It's between you and a private party, so there's no institution in between you guys. So that's why you should use it. Flexibility, fast to close, it's easy, and it's a preference for me than you overusing your own money, just because you can do so much more, because there's a lot more people's money out there than there is one person's money when it's just you. So the next thing is, now that you know what it is and why you should use it, is how the heck do you find it? Because that's like a lot of questions, especially for newer investors or even some seasoned investors that just haven't had to use private money yet. How do you find it? And the best way to do it, in my opinion, is to get out there and start telling people what you're doing so they can observe it, so they can hear it, so they can see it, they can feel it. Social media is obviously a great platform for that. One way to do that is you can be posting on social media about the projects you're dealing with or the things that you're working on, and talk about how much an investor made with you or how much an investor could have made if they had invested with you on the deal. That just gets people hearing and seeing what you're doing. It starts building a track record to a very wide audience of people who follow you. And then just tell people in your community, tell your friends, tell your family, go to people, at investor meetups, talk to other local business people, entrepreneurs, just tell them what you're doing. Hey, I'm in real estate. Yeah, I'm flipping this house up, in this part of town. Here's what's going on. Last year I did this many. This year I'm planning to do this many. Really just start talking about it and sharing, what you're doing. And if you can always find a way to loop in investors, I think that helps, just because it, piques people's interest that may want to be an investor. And to be honest, it's usually somebody close in your network that becomes your first private money lender. And a lot of times folks are, quite honestly, just not comfortable with asking for money from people. And so, especially if it's that close to their network. So what I say is just ask the people, if you're uncomfortable, if they know, somebody that might be interested in lending. And usually that will at least spark the conversation. And the person that you're asking that might get offended and be like, hey, I have money, I could loan to you. Or they might actually know somebody that they have a friend that's been wanting to get into real estate. And that's also what you'll find a lot of times, is people will come to you and say, hey man, I love what you're doing. I want to do what you're doing. Like, how can I get started? How can I get in the game? Maybe they've been saving up cash and sitting on the sidelines just waiting for the right opportunity. Those are the perfect people to say, hey man, I've got a deal coming up. Why don't you be my private money lender on that? And here's the thing, it doesn't have to be a loan for the full purchase price. It could be a loan for the construction cost. It could be a second position loan for the down payment, where, maybe you're getting a 90% LTV from your hard money lender and you still need to come up with that 10% down payment. Perfect. Bring them in. A lot of times people, especially if they don't know what's going on, they'll want equity. They'll say, well, if I'm bringing the money, I want half the deal. It's like, you don't really honestly have to do that. There's enough money out there. If you feel inclined to give away part of your deal, especially if it's significant, be my guest, but you don't have to do that. That's kind of something that I would frown upon. And it usually comes from people that don't actually have a lot of experience and maybe have never loaned to people before anyways. So anyhow, really to summarize that, is just like, get out and talk to people, show people what you're doing, and build a track record. Most importantly, from an ethical standpoint, before you take other people's money, just build a track record and prove to yourself that you can operate this business successfully. And I always tell this to people, like, you need to respect other people's money more than you respect yours. Like, if you lose on a deal, your lender should not lose on a deal. Your private lender should never lose on a deal. You should be able to pay them back no matter what. Mike and I have lost plenty of money on deals, and we've never not paid our lenders back what they're owed, plus the interest that they're owed, any points, full meal deal, and they keep coming back and they keep doing loans for us. And that's just the right thing to do. That's an ethical thing to do. Don't go out there, and when I get into the documents, you'll get this here in a minute. Don't go out there and saying, I'm going to try to get the loan so that I don't have to secure by anything in case something happens. I won't have to pay it back. Like, don't be that person. There's people out there that pitch that. That's just unethical. That's not the kind of crap you want to be doing. So leads to my next point. Once you do find people, and maybe they've never done a loan before and you've never set up a loan, or if you're listening to this and you want to become a private money lender, this is the part for you, is like, what documents and like, how do you do this? How do you set it up so that everybody's protected? And that is exactly what you should do. You should never take money or give money to anybody from an investment standpoint without having everything set up properly. So document wise, if you're a deed of trust state, which you should check on if whatever state you plan to get a loan in or you're lending in, have a deed of trust or a mortgage. Those are kind of the two different types of documents. In Washington State, where I'm at, we use deeds of trust, and that is a recorded document against the property. So if I'm going to flip a house, say I pick up a house for $150,000, I bring on a private money lender and for $150,000 to actually buy the property, that deed of trust basically records the first position lien against that asset, against the real estate. They go down to the county courthouse, record it, done. That is there. And then it also references the promissory note, which is the second document you should have no matter what state you're in. If you're a mortgage state, the mortgage would reference the promissory note, just like the deed of trust. So the promissory note is really all of the details and the terms around the loan that you're giving or you're getting. It's going to have the interest rate. It's going to have the monthly payment. It's going to have all the late payments. If like if you're late on your paying the interest or your monthly payment, all that details. It's going to be, a full page or 2 page of all the terms and what happens if somebody doesn't pay and all that sort of stuff. So that's the second one you need. The third one is you need to have a requirement that the person getting the loan, or if you're getting the loan, provides insurance with you as the lender on the policy, assuming you're a first position mortgage or first position loan. Like, you need to make sure they have insurance at closing, and you want to make sure that that insurance is enough to rebuild that dang house in case it burns down. Don't let them get it underinsured. Make sure the insurance is enough and work directly with their insurance agent if you have to make sure that that happens. The other one, which is really important, is to make sure that you have a business use document. It's a 1-page document that just basically says, hey, you are borrowing money from me, and that house is going to only be used for business purposes, meaning the person can't move into it. Because if you think about it, say they move into it and the loans are typically less than 12 months on these anyways. They never pay you, and now you got to go through a whole eviction process, because now, depending on the laws locally, what you're looking at is now they're a tenant or a person basically you're foreclosing on and trying to evict, and that's a whole nother mess of a nightmare. So you have a business use document. And then the last thing is a personal guarantee, which basically says that if the person getting the loan does not pay you back and their little LLC that they got the loan in, LLC 123 Main Street, goes, to you, which is very easy to do because typically a lot of people out there that are doing house flipping and stuff like that, they don't have a lot of assets anyways in that entity that they're acquiring these properties in. They go upside down, belly up. At least at that point, you can go after their personal assets, including their personal home, to recover the money for the loan. Now, if you are a person, an investor that wants to get private money loans, I would highly recommend you go out there and you get these minimum five documents drafted by a lawyer, a real estate lawyer in your state. A lot of times title companies and escrow companies can refer you or have somebody on staff that can do this. And get that deed of trust and mortgage, depending on the state you operate in, the promissory note, an insurance requirement document, a business use document, and a personal guarantee. Those are pretty much all standard documents that are floating out there, and you should have that all drafted up and ready to go. And so when you find that private money lender, you can say, here's all the documents, and this one protects you for this reason, this one's for this reason, because these are all just protections, right? I just gave you 5 documents that really protect the lender. So when you show up super professional, someone's like, yeah, I want to give you $200,000 to do this. I just don't know. And you can show up super professional and say, here's the terms that I generally like to get loans for, maybe it's 12%, 10%, whatever it is, how many points, whatever. And you can say that to them, and you can show them the actual documents and explain to them how they're protected. You're going to answer all of their questions before they even know to ask them. And you, as the investor, are going to look a lot more professional and be a lot more lendable from this person's point of view. And you should be that prepared when you're taking on other people's money. So that's the last thing I wanted to cover here. I know I'm going a little bit long for one of our Friday focuses, but I hope that this helps you understand the full picture of private money. And this last portion, which is usually the biggest one that people don't know what to do about on both sides, those documents are huge. If you have questions about those, hit me up. Investorman Dan on Instagram, DM me, just ask me whatever question you have. And these are really important to have. And once you have them in your back pocket, you can just template them and reuse them from a lender standpoint and from an investor standpoint, depending on what side of the fence you're on. And if you're going from state to state, unfortunately, you'll probably want to get them reviewed and adjusted by state. So if you're a private money lender or you're an investor hopping the fence to go from Florida to Georgia or something like that, you just want to make sure that they are in alignment with the state-specific rules. And also remember that you can't just slap any interest rate on a loan. There are actually loan requirements in different states that have like maximum interest and maximum fees and all this stuff that you can charge. And so you don't want to create an illegal loan by saying you're going to give some crazy 25% interest, because that's probably illegal in most states anyways. So I'll stop there before I keep rambling on about these. I could talk about loans, lending, investing, all that for days, because there's just a ton of little nuances here. So I'm going to stop it there. I will do another episode that covers other types of lending sources and funding sources for your deals. But anyways, have a great weekend. Hope you enjoyed this. Talk to you soon.
Thanks for listening to this Collecting Keys Friday Focus. Be sure to subscribe wherever you listen to your podcasts.